We, however, are going to start with some new moves by the committee, because not every day where we have many moves to get to in the show today. We'll lead with that. We'll lead with Josh Brown with a new buy. It is ServiceTitan. It is TTAN. Hasn't quite traded a year. Hasn't quite traded a year, almost. Why this?
So I watched it come public on the floor of the New York Stock Exchange with you, Judge. I don't know if you remember, but we made a joke on air that my landscaper should take a look at it, because I think it would help him streamline his business. And shout to Frank, by the way. So the story here is that I watched it for a full year. I watched all its earnings reports. I tracked the price, and I looked at its fundamental progress. And I felt that now would be a good time to start a position. It's not quite at its highs. It did have a nice rally after reporting on December 4th. It's a really exciting business for me. I've done well in this space. I think about these vertical software companies that come to dominate a specific niche and almost become so entrenched and so ingrained in the workflows of that niche that they just become category killers, they become compounders. And ServiceTitan is at a very early stage of that. So it's going to be volatile. The company doesn't earn money yet. They're not attempting to. They're in crazy growth mode. And I think that, I mean, this is not even a stock. I don't even know if it's in the Russell 1000 yet. It's certainly not in any of the S&P indices because they haven't even been trading a year. But like, that's the opportunity, because managers that are pigeonholed into the S&P 500, they're not paying attention to this yet. Here's what's going on. Basically, roofers, gardeners, construction companies, this is both small and mid-sized business as well as commercial, exterminators. They need to bill their customers. They need to set appointments. They need to have their workflows be infused with AI to speed up workflow automation. They need these tools, and ServiceTitan is becoming the category killer for all of these different trades. The last earnings report, they beat on the top, they beat on the bottom. Revenue grew by 25%. They're expected to grow revenue by 20% as far as the eye can see. It's a subscription business, which is great. We love these ARR companies. Subscription revenue, $182.8 million. That was up 26% year over year. And gross margins, which are, I think, going to become the story, 80.2%. Up 310 basis points per year. So the story is, the more of the trades they can make partnerships with and get their software into the technicians' hands in the field, the stickier this business will be. If it reminds you of Toast, which I talk about a lot, very similar concept, and nobody is better positioned to bring AI to the trades. The last thing here, their best customers are PE-backed. It's important not to think about all these trades professions as being small and mid-sized businesses. There have been huge roll-ups created over the last few years by private equity. Those are the earliest adopters of this type of software, the stickiest customers, and not only does it help them with their profitability, it actually drives faster sales growth. And so that's why I think this is such a great way to play the AI trend through a specific vertical.
Let me ask you a quick question before we move on to other moves. It's up 4% year to date, and you pretty much have, almost a full year to judge the stock. Is there something that the market might be skeptical about? Is there competition in the space?
It's a full valuation.
What's the deal?
It's a great question. It's a great question. It's not cheap. It's about 10 times forward sales. So that is not what we would conventionally consider to be cheap for a software stock. I think if you look at the IGV names, they're probably more like between 6 and 8. But they're also growing much faster than most of the other publicly traded software companies, because this is like a brand new business and they're dominating it. The other thing is, they're not expected to reach GAAP profitability next year. So there are a lot of people who just would look at this and say, all right, I'll wait until they get earnings positive. People said that about a lot of the stocks that I'm involved with. Uber was non-profitable for 3 years when I was buying it in the 20s, the 30s, the 40s. You have to believe that this company will know when it's time to focus less on sales growth, more on profitability.
Okay.
Right now, it's a land grab. And so, I think that, again, I think that's the opportunity. If they were already profitable at $10 billion market cap, this thing would be in the mid-cap 400, and it would be more discovered.
Okay, good stuff. Thank you.